Okay, good morning. I'm gonna call to order the special called Board of Directors meeting of Perimeter Park West Incorporated, and we're gonna begin with a legal public statement.
Yes, sir. For the record, I want to note that this is a special called meeting of the Board of Directors for Perimeter Park West. This meeting is being broadcast via video teleconference pursuant to Kentucky Revised Statute Section 61.826 and may be viewed by the public at the Kentucky Public Pensions Authority offices located at 1260 Louisville Road, Frankfort, Kentucky. It is also being broadcast to the public via Facebook. I ask if you are speaking and not appearing by video, please identify yourself before talking. In the event the video or audio broadcast is interrupted, we will attempt to reestablish a connection. If a connection cannot be reestablished within 30 minutes, the meeting will be adjourned and rescheduled to another date.
Okay, thank you. Roll call, Sherry.
Yes, sir. Mr. Piercy,
Here.
Ms. Hampton,
Here.
and Mr. Powell.
Here.
Thank you.
Okay, our first item is the approval of minutes from the May 5th PPW shareholders meeting, and I'll seek a motion.
Motion
So
approved
moved.
as written.
Second.
Okay, we have a first and a second. Any discussion? Seeing none, all those in favor?
Aye.
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 Any opposed? And the motion carries. Our next item is review and approval of PPW fiscal year in 2024 financial statement audit and 990 tax return. And it looks like Larry Gumbel's with us. You're on mute.
Larry, you muted.
Thank you. Sorry about that. So yeah, I'll start over. So as Keith said, I'm Larry Gumbel with Jones Nail Mattingly. I'm the partner in charge of your audit. So here to go over the draft audit this morning, as well as the communication letter communicating the results of the audit, and then finally the 990. So I want to thank you for having me this morning. Thank you for having Jones Nail Mattingly as your auditors. Also, I don't see them on here this morning, but I want to thank Liz and Connie both for their help during the audit. I know we thank them every year, but it really is important. They get us everything we need and keep us going. So we want to acknowledge their support during the audit. Again, we'll start with the draft financial statements. Keep in mind again that these are in draft form for your approval, and we'll start on page 1, which is our independent auditors report. Again, in draft form, we plan to issue an unmodified opinion on your financial statements, which is the opinion saying that these financial statements present fairly in all material respects the financial position of Perimeter Park West in accordance with generally accepted accounting principles. So that's the best opinion that we can issue. Also point out that we did conduct our audit in accordance with generally accepted auditing standards. If we look at page 3, this is your statement of financial position. Here you'll see your assets, your liabilities, and net assets as of June 30, 2024. So your total assets at June 30, 2024 were $6,102,577. Very comparable and consistent with your prior year. You can see the comparable column there for 2023. Your total liabilities were $472,845, and that was a dividend that you declared to be paid in July that has been accrued, and I do believe it was subsequently paid in July. And then finally, your net assets, all without donor restrictions, are $5,629,732. So your total liabilities and net assets, $6,102,577. Again, very consistent and comparable with your prior year. If we look at page 4, that's your statement of activities. Here you'll see your revenue less your expenses, and then your change in net assets for the year. So total revenues were $997,198, of course, comprised of your rental income from the lease, and then interest income on your bank accounts. And then in total, you had expenses of $692,084. So revenue less expenses, you had a positive change in your net assets, an increase in your net assets for the year, $305,114. Again, these numbers for the statement of activities are very comparable and consistent with the prior year of 2023. We look at page 5, that's your statement of functional expenses. So this is a statement that further breaks down your expenses that we just looked at on the statement of activities. So it breaks them down further by their natural classification that you can see there, as well as by function. So it's just more information for you to digest. So if you care to review that, you can see these expenses again. They're in total $692,084 for the year ending June 30, 2024. And again, comparable to the prior year, very comparable. We look on to page 6, that's your statement of changes in net assets. So we see the beginning balance at June 30, 2023. The activity in your net assets for the year, your increase in net assets that we just reviewed on the statement of activities, $305,114. And then the dividends that were declared and payable, $472,845, bringing you to that ending net asset balance of $5,629,732. And again, your net assets are all without restriction. If we look at page 7, that is your statement of cash flows. Here is presented your cash flow by operating, investing, and financing activities. So for the year, you had a cash provided by your operating activities of $625,548. You had net cash used in your investing activities of $152,703 for the purchase of property and equipment. And then finally, in your financing activities, you had net cash used in your financing activities of $405,687. And that was the payment of the dividend that had been accrued in the prior year. It was then subsequently paid during this past year. So in total, you had a net increase in your cash for the year of $67,158, bringing you to your ending cash balance at June 30, 2024 of $972,845. So the remainder of your report is the notes to the financial statements. So I'll just cover a few of the more relevant notes. We won't go through each and every one of them. If we look on page 10, just want to point out to you here, under about halfway down on the page, it says adopted accounting pronouncement. Just want to point out there was a new accounting standard. So you did adopt that during the year. It wasn't, had no material impact on your financial statements, really just resulted in some new and enhanced disclosures. It's relative to accounts receivable and credit losses, and you have no accounts receivable on your balance sheet. So that's why I say it's really had no material impact, but it was a standard that had to be adopted, and you did adopt. So just want to point that out. We look on page 11, the next page. Note 3 is your liquidity and availability of resources. And here we're just identifying the resources you have available to meet your obligations as they come due in the next 12 months. So in your case, it's cash. You can see at June 30, 2024, you have $972,845 to meet your obligations as they come due in the next year. So you're well positioned to meet those obligations. Note number 4, right below that, discusses your operating lease. Of course, the lease is leasing office space to KPPA. The lease was amended effective December of 2020, and it provides for monthly rent paid in the amount of $80,164, continuing until the lease is either altered or terminated. So in total, each year, that's $961,968. And so, you would expect to collect that same amount each year again until the lease is altered or terminated. If we look on page 12, note number 6, this describes your management agreement, which of course is with Norman Enterprises and continues through November of 2024 at $8,333 or $334 per month. So just point that out. So that is coming up, coming to an end, that agreement in November. So that really concludes the financial statements. Any questions before we would move on to the letter communicating the full results of the audit?
Yeah, I have one, Larry.
Okay.
Expenses were up, and so the dividend was down, as I could see that. And I guess this goes to the team over at running this. The expenses, I know we had a few unusual ones. Do you see this as it was just an unusual year with a lot of expenses? Or is it going to be that way because we're an older building going forward?
I think it's the older building. I don't know that it'll continue to go down, but it hovers around this. It's up some years and down other years. We
Okay.
could get some sort of a trend for you, Lynn, if you'd like that, to kind of see where it's been up and down.
No, I can watch it. I can look at it on the financials and stuff. And if it gets
Yeah,
to the point where, we need to do something big,
I do not see it as a continual downward slope. It's more volatile than that, but it's not hugely volatile. It's just up and down pieces.
Yeah. I guess when I look at it, I just wonder if there's just a consideration of depositing money in a repair account so that it's more even. Like repairing roofs. We do that every 20 years. Deposit something in an account would be an asset for us, but we deposit something in an account and then it just smooths. I don't think we do that now.
We do not. We do not do that right now.
No.
Any other questions or anything else to go through? No? Okay. We'll move on to the letter communicating the results of our audit. That's the 990 there. I don't know if you have this on the screen or not, but I can go through it. It's a 2-page letter, again, just communicating the results to the group charged with governance of the audit, which of course is you. Tells you that management is responsible for the selection and use of appropriate accounting policies, which were described in note 1 to your financial statements, and also pointing out that you did adopt the accounting standard update regarding financial instruments and credit losses, and again had no effect on the financial statements. Also point out that accounting estimates are an integral part of any financial statement, and the most sensitive estimates in these financial statements are your estimate of depreciation expense, which is based on the depreciable lives, remaining depreciable lives of your property and equipment. Also, certain financial statement disclosures are particularly sensitive because of their significance to the financial statements. The most sensitive disclosures, we've already went through those as we reviewed the financial statements. So I won't go through the disclosures another time. I am happy to report that we had no difficulties encountered in performing our audit. We had no disagreements with management. Also, professional standards require us to accumulate all known and likely misstatements identified during the audit and communicate them to management. Management has corrected and accepted these misstatements, and none of the misstatements were either material, either individually or in the aggregate to the financial statements as a whole. We also requested certain representations be provided to us for management in a management representation letter that has been provided to us and signed by Keith and Connie. Also, in some cases, management may decide to consult with other accountants about auditing and accounting matters. It'd be similar to getting a second opinion. To our knowledge, there were no such consultations with other accountants. And then finally, we may discuss a variety of matters, including application of accounting principles and standards with management each year prior to retention as us being your auditor. However, any discussions that did occurred in the normal course of our professional relationship and were not a condition to our retention as your auditors. So that concludes the results. Any questions on any of that information? No? Okay. So the 990, there's a copy there for your review. The 990, of course, is an informational return filed with the IRS. The numbers on the return mirror the numbers on the financial statement. So I won't go through those. I will just point out to you page 6 of the 990 is information regarding the governing body and management and the policies of the organization. So I would encourage you all to review that, the members of this group, to review that information as it relates to you in the organization. Otherwise, the return has been prepared for electronic filing. The due date is November 15th, and we expect to have approval from you and file the return on time. So other than that, don't have any other anything else to go through unless you all have other questions.
Okay, questions or comments for Larry? And if not, thank you very much, Larry. And I will seek a motion to approve both the financial statement audit and Form 990 tax return to send on to the IRS.
So moved.
Second.
Okay, any discussion? Seeing none, all those in favor?
Aye.
Aye.
Opposed? And that motion carries. Again, thank you very much, Larry, for joining us.
Okay. All right. Thank you. I appreciate it. I'll step out now. Thanks.
All right.
Okay.
Next up is review of the leasing policy, and Rebecca's down to talk about that.
At the last quarterly meeting, we brought to you all of the policies. This is the one that we tweaked a little bit at that time, and you asked, you wanted to see a clear version of this. So we changed B. B that says lease agreements will be reviewed every 2 years. We changed it to 5. So with your all's permission, you can approve this now. You just wanted to see a nice marked up, clean version of it. Also, the date at the top will have to change to today because of the August 30th meeting that was canceled and rescheduled for now 9/18. So we will also make it 9/18, and then Keith can sign.
Okay.
Motion to approve.
I'm sorry.
Motion to approve.
Oh, I'm sorry. Thank you. All right. Gonna get a second?
Second.
Any discussion? Seeing none, all those in favor?
Aye.
Opposed? And that motion carries. And our next item is the update on building maintenance projects. Ann and Rebecca are both listed.
We had a very busy time in spring.
And we're struggling to hear you, or at least I am. Can you all hear her okay?
No, it's tough.
Very low volume.
Can't really hear you.
Can you hear me now?
Yes,
Yes.
much better.
Let's try that again. Okay, so we had a very busy spring and summer with a lot of rains, a little bit of storm damage. We took care of it very quickly. Donnie did a great job in responding as needed. So you're going to see that throughout listed on your document there. There's also pictures. I just wanted to give you a kind of a frame of reference of what it looked like in case you hadn't been to the campus in a while. But everything has been repaired. Everything's been taken care of. We did replace some landscaping. If you remember, 2 winters ago, we had extremely cold. It was right around Christmas. We lost a lot of vegetation, a lot of shrubs and everything. And the landscaper, we have a contract with them. He thought they might come back for a few of them. Some of them did, some of them didn't. So we did go ahead and replace them. So everything's looking fresh and new. It's looking good now. Does anyone have any questions about any of the completed projects or anything that they see here? Okay,
All right, is that it, Ann?
that is it.
Thank you very much.
You're welcome.
Next item, update on contracts, both the KPPA lease agreement and our Norman Enterprises property managed agreement. I think Rebecca and Vicky are both listed.
We provided for you, we just changed the leasing policy to go every 5 years, but the last time we looked at it was in 21. So it was just time to look at it again. So I provided it to you guys just for your review. I am not recommending any changes at this time. What I gave you is, you're looking at on page 58 is the most recent addendum. That's the one from July of 21, where basically we just changed our name from KRS to KBPA. On the next page was the first addendum to the current contract, where we reduced the lease amount by an amount that was to account for agent time. So agents are employees of KBPA, and KBPA should be compensated for that time. So it's $105,000. We did some estimates, and that was in December of 2020. And then the original that was signed in December of 19 follows that. I did do some checking with finance as far as current rates. We're still pretty much in line with current rates. So I don't see any action for you all to take at this time, but that'd be up to you guys.
I don't see any need to do anything with that. Anyone else?
No.
Perfectly in line, works out great.
Okay.
Okay, the next contract is, you've already heard once today that are from the auditor that our maintenance contract is up for renewal. So his current contract ends without any renewals to it in mid-November. And so we sent out an RFP, and I'm going to let you talk about this since you took care of this.
Sure. So we prepared an RFP, which I've included in here for your reference. It kind of talked about the scope of work. We were asking for people to include kind of the references, any kind of work history, credentials that they had. And I also included for your reference who I sent them to. We tried to do a very large group. We did hear back from 2, TJ Wilder and also Norman Enterprises, which is Donnie, which is our current maintenance staff. So we would like to recommend continue on with Norman Enterprises for a new period.
And he, correct me if I'm wrong, I think our first contract with him was 100,000.
Yes.
That's correct.
Okay. And have we done any increases at all since he's been in that spot?
No.
Okay. And he's been with us probably what, 3 years, maybe 4?
I'm thinking this is 4.
Okay.
The original contract, I think, was 2 years with 2 one-year extensions. And then
Okay.
after that, the board has changed its policy to allow 4-year contracts. So this one will be for the 4-year period of time.
Okay. So essentially this is a 10% increase, which is the first increase he's had in 4 years.
Correct.
And I think it's safe to say that everyone's been pleased with his work and the way he's performed.
it's a 10% increase over the other bid also. Can you also add the reasons that you feel that it is worth the 10% more? What other things are in this contract?
He actually is a licensed plumber.
Mhm.
So, he's bringing that as well. So when we do have issues around the building, he's able to handle particularly the plumbing very quickly and very well.
Okay.
And I appreciate his connections throughout. He's always seems to know who can get things done. He knows who to talk to if there's something weird in the buildings. The buildings are really aging, and there's one interesting issue after another with these buildings. So Donnie's just been terrific in that area.
Is it only Donnie? Are
He
there
has
other
a
people?
couple of folks who can assist with him, and he employs them separately. That would be as part of the contract. He's here most of the times, but obviously he has vacations, he's sick, those kinds of things. There is somebody on the property who belongs to who's employed by Donnie Enterprises, Norman
Okay.
Enterprises,
Yeah.
every day.
Okay, and this is money that goes to his company. This is not money that buys equipment or anything like that. We buy that
Correct.
directly.
That's
Okay.
correct.
Okay, so basically, yes, I agree. A plumber's rate would take it up to it would explain why it's $10,000 higher than the other
Right.
bid.
He's
Okay.
a master plumber since 2002. He's also a journeyman electrician since 1999. So a little bit more background on that.
Okay,
Yeah.
sounds good.
I also liked it a little bit better than the other one because the other one is a kind of a bigger business.
Mhm.
Donnie's business outside of PPW is a little bit limited. It's not that he doesn't have any, he does, but it's smaller pieces. I feel like we're his bread and butter, so to speak, as far as his attention and his priority. And I appreciate that.
Yeah, I think the fact that we know, I mean, he has demonstrated performance with us makes it worth it. Whereas if we just completely change course here, who knows? It might not work out. So I think it's definitely worth it. And considering the cost of living adjustments given to obviously he's not a state employee, but just using that as a gauge. I mean, there's been pretty significant cost of living raises going to employees in the public sector. So I don't think a 10% raise here is unreasonable at all. I'll seek a motion to approve if anybody's willing to make it.
So moved.
Second.
Okay, any discussion? Seeing none, all those in favor?
Aye.
Aye. Any opposed? And that motion carries. I think that's it for contracts.
Yes.
All right. And next up is the review of the unaudited financial statements for the quarter that ended June 30th. Liz and Connie.
Good morning. We will walk through the financial statements as prepared by our bookkeeper, Harrod and Associates here in Frankfurt. They're much the same as what Larry just went through in our audit. So first, we have the statement of assets, liabilities, and net assets. With our total assets at the end of fiscal 24 right at $6 million. Our next statement is the statement of revenues and expenses. We'll focus on the third set of columns for the 12 months ended June 2024. One of the most significant increases was in our interest income, in a positive manner. Just for your information, in fiscal 23, our interest earned on our money market account at Community Trust ranged from 2.6% to 5.57%, whereas in fiscal 24, we earned our minimum rate was 4.74% and went as high as 5.75%. So that's why our interest income is significantly greater this year. So we ended our 12 months, our fiscal year, with our net income at right at 300,000, 299,853.37. And our last statement prepared by Herod is our statement of cash flows. We ended our fiscal year with 972,845.05. That's a combination of our money market account and our operating account, both at Community Trust.
Okay, any questions or comments on the financial statements? And if not, we'll move right on to the update on the dividend distribution.
Which our statement of cash flows segues nicely into our dividend distribution. With, as we presented in the last meeting, our policy states that we will pay a dividend of any funds in excess of 500,000 combined balance of our June 30 reconciled account balances. So on July 31st, we did execute that dividend distribution in the amount of 4,472,845.05. Jerry signed off on that and we processed it on the 31st of the month.
Okay, questions or comments on that? And if not, we'll move to budget to actual.
This one gets really fun to read at the end of the year. My apologies. So I'll touch on a few of the things that were outside of our expected budgeted amounts. I already told you about the interest income, which was significantly higher than we expected. Our property and liability insurance increased, which caused us to be over budget by almost $5,000. We did add to our existing policy to cover flood insurance. So that accounts for the majority of our being over budget in that category. Our non-budgeted expenses were also over budget. That was due to the appraisal that we had done in last fall. So that put us a little over budget in that category. We, the other ones that I thought significant you might be interested in were our generator and maintenance. Down in the maintenance and repairs 7,400 section, we had a significant maintenance repair last fall that, from talking to Ann, they basically rebuilt the computer of our generator. So we should be in good shape going forward there. That's one of those, like Rebecca was talking about, the spikes that as our building and our equipment ages that might be unexpected.
Yeah, Liz, can I interrupt you there just on generators? We are on year 20 of a generator that's expected to last about 18 years. I think that there'll be some expenditures here. I'm hoping to wait till the new fiscal year, but I'm not sure about that one. Anyway, just giving you all a heads up that there's some issues here, and certainly it's one that's important to our clients that it gets repaired before it dies.
And
Go
can I
ahead,
add
Liz.
something too?
Go ahead.
We do test it every Friday, so to make sure it's operational.
Liz?
And I guess finally the interior, exterior, cannot speak today, interior and exterior door services and repairs. We actually had made two doors fully, I guess, replaced. Those were significant expenses last fall and then early in February of this year. That caused us to be a little bit over in that category. are there questions about categories I didn't touch upon?
I just, I want to ask a question on the property insurance question. Did we go out and try to get multiple bids on that, or did we just renew with our current carrier?
We have just been renewing, but I think Rebecca, didn't we?
We've done it in the last few years. I'd have to
Two?
look, Keith. Let us get back to you on that answer. I'm just not sure.
Okay, I mean, 20% is obviously everything's gone up, and I just fought that battle with my homeowner's insurance, so I know everything's going up. But we may need to look into bidding that out, or getting at
Absolutely.
least getting multiple quotes in the future rather than just doing the auto
I
renew.
can speak to that if you want.
Okay, yeah,
Yes, so I talked to West Bend last fall, and their advice was to not go back out, and because once they come in, they're gonna, if you ask for new groups, they're gonna come in and want to look at your roof, and they said, you don't want to do that every year. So I believe, and Rebecca is gonna look it up, but I believe we're into reviewing for that this fall as well, would be the total. But we have looked at it.
So who is that company? Is that the broker, insurance broker that said don't do it?
Chenault and Hogue, and then they looked and got quotes, and it was West Bend, and West Bend has been the lowest.
Okay, so is West Bend the insurance company and the other one is the broker, and who recommended don't do it?
The Chenault and Hogue.
Okay, yeah, I didn't want the insurance company being the one that recommended it.
Right.
Okay, thanks.
Mm-hmm.
okay. Any other questions on the budget to actual? I believe there's no motions, correct, Liz?
Correct.
Okay. All right, and then Liz still has ratifications of acts of officers, directors, and agents.
Right, and these are the last 3 months of our fiscal 24. So previously each month you should have received the detail with the checks and the invoices for April, May, and June of 24. And all we have in the board material is the summary. So if you don't if anyone has any questions regarding any of these expenses, otherwise we need you to ratify the acts that we did as agents in paying these invoices.
Okay, questions or comments? And if not, I'll entertain a motion.
So moved.
Second,
Any discussion? Seeing none, all those in favor? Aye.
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 Opposed? That motion carries. Thank you, Liz.
Thank you.
Next item is other business. Do we have any?
I think now that it's special called, we can't, I don't know. Vicky, can I talk about?
It's on here, it's on the agenda, so because it's on
Okay.
the agenda, you can discuss it.
I'm just going to tell you that we are super close to pushing out the PPW page off of KPPA. It'll be a really simple page that just points them to Facebook to watch the shows and has a list of our policies, gives them a place. This was, we pulled this out from the control audit that we did where they suggested that you need a place to report fraud. So there'll be a form there to report fraud and a form to ask for open records requests. But it won't change regularly, just when you update policies. But that's coming very soon. If you guys want to preview it, I certainly can send it to you ahead of time before we push it out.
Okay, questions or comments?
I have a comment and question for Rebecca. Not related to what you just talked about. We had to reschedule our last meeting because of Facebook Live. We didn't have enough members. Have we thought about maybe, in case we fall down below that, of maybe a different alternative? I know like the LRC has a YouTube page that they can broadcast to. I
Yes,
didn't
we
know
have
if we
talked
maybe look
about,
at that.
we've talked about several alternatives. We don't have great ones yet. But yes, YouTube is the most reasonable extra alternative for that. We just, PPW itself doesn't have a YouTube channel, but it can. That's a reasonable expectation to get. We'll also need to change, if we do that, we would change notifications and announcements that say, watch it here or here, kind of things. So we're looking at that. We have not come to the end of that decision yet.
You know, because for those who may not aware of it, that's watching this, that we had to cancel last meeting because of a policy of Facebook where you had to have so many Facebook members to be able to do Facebook Live, and we hadn't reached that number then.
Yeah, Facebook is interesting. You know, it's free, but that means they get to change the rules whenever they feel like it without telling anybody, which is what happened. We got surprised by that and had to cancel that meeting at the last minute. So an alternative is an excellent idea.
That's all I had. Thank you.
Thank you.
Okay, any other business? And if not, we'll move on to scheduling the next PPW board meeting. Sherry was looking at both November and December.
Yeah, because I
Proposal.
wasn't for sure. Looks like we have, there's Thursday, November the 14th, Wednesday, November the 20th, where we can go into December, like the 10th or the 11th.
November 14th is fine with me. Lynn and Jerry.
I'm looking
I'm
now.
good with the 14th off. So.
I am too.
Okay, so it looks like we're good there. So November 14th at 10 a.m.
Sounds good.
Okay. All right, we have reached the end of our agenda. Thanks everybody for participating, and we will see you at the next meeting. We're
Okay,
adjourned.
thanks everybody.